What's going on, everybody? In today's video, I'm going to be showcasing ICT's swing projections, what they are, and how to use them effectively. So the tool to find your swing projections would be the Fibonacci retracement tool. Default on TradingView, it is Alt-F to pull it up, and it brings up a range that you can select between high and low. And for the settings of this tool, you're going to put your standard deviations from 0 all the way to 4 and 0 to -4. So some things you want to identify in order to find your swing projections. First would be your smart money reversal, and this can be identified finding a significant market structure shift after the reversal has taken place. Second would be original liquidity objective, and this can be a form of obvious buy side or sell side liquidity that's resting at the beginning part of the curve. And third would be retracement sections that can be measured after the reversal point. This can take place as close as you want to the SMR or as far up before the liquidity objective has been hit. Swing projections are most commonly used to figure out how far price can deliver past original liquidity objectives. So if you have a buy side liquidity mark here and you're wondering how far can we dip past that liquidity mark, you would use a swing projection to figure out what would be the potential high or low that's formed past that liquidity. So in order to use this effectively, you need to utilize the things that I mentioned before. So at the bottom here, you have your smart money reversal, and you can confirm that with a market structure shift, which can be found here. And then you have your original liquidity objective in the form of buy side liquidity up here, as well as a retracement section that can be found right here that we can use a Fibonacci tool to measure how far we can reach above that high. So you're going to take your Fibonacci tool and measure from high to low, and you use your standard deviations as potential targets past your buy side liquidity in this case. So you're going to use your first standard deviation or half standard deviation above your original liquidity objective. So in this case, you have your -1.5 standard deviation at 74 even. So you would expect price to deliver above that buy side liquidity up into the 74 even mark, or potentially up into the 74.07 mark. So here's the flip side example where you have a smart money reversal at the top. You have your market structure shift below this low. You have your original liquidity in the form of sell side resting below this swing low right here, and your retracement section between this low and this high, as well as down here. So we'll use this to measure our Fibonacci tool from low to high, and you'll find right below our sell side liquidity point we have -3 standard deviations at 73.67, as well as -3.5 at 73.61. So you would expect at a minimum the 73.67 to be hit as price delivers below the sell side liquidity and possibly into the -3.5. So here's a live example on ES. We have our smart money reversal here at the low. Then you have your market structure shift above this high, and your original liquidity as buy side resting above this swing high as well. So if you're wondering how far can we get above this swing high level, how do you predict a movement such as this right as this top? Like, how far can we go above it? So if you take your retracement, which is this low to high past the market structure shift, use your Fibonacci tool and drag from low to high. You look for the first standard deviation or half standard deviation above your buy side liquidity point, which would be this -1.5 standard deviation. And if you look, our swing high here is formed exactly at 4212.75. And if you were to use a different retracement, such as this high to this low, you can find that your standard deviation of -1 is at 4213.5. And you can see at this high right here, we do hit one tick short, and then eventually right over here, we run it out by half a tick right there, 42103.5, and then we start to trade lower. So here's another example where you have your smart money reversal here at the bottom. You have your market structure shift that happens at this high right here. Original buy side liquidity target above this high, and you're wondering how high can we get above this swing high right here. So you'll take your Fibonacci tool, measure from your retracement targets high to low, and you'll find your first standard deviation or half standard deviation above your buy side liquidity point, which would be this -3.5 at 4170.5. If you use our call out tool, you can see this swing high is exactly at that same level, and these three are about one tick short, and you can see that we start to move lower. Here's another example to the downside on ES. And since price is fractal, this can be used on almost any time frame. So here we have the 15-minute chart our smart money reversal taking place at the top up here, and you can see we do have a market structure shift below this low, and more obviously below this low. We have original sell side liquidity resting below the swing low here at 4 p.m. from the previous day, and we're going to use this to project how far we can get below this sell side liquidity. So if you take your Fibonacci and you measure from the retracement swing low up to the swing high here, you look for the first standard deviation below it, which happens to be -2 at 4114 even. If you use the call out tool, we'll measure this low down here, and it happens to be 4114 even exactly. That's the swing low of the day at 12 p.m. and you can see that we start to rally after that. So here's the 15-minute chart on oil futures. You have your smart money reversal at the low, market structure shift above this high, and your original buy side liquidity resting above this swing high right here. So you can use your fib projection on the retracement level, which you have a low to high here after the market structure shift. So if you take our fib and measure it low to high, you can find that the first standard deviation above the buy side liquidity is this -4 standard deviation at 73.73. Eventually the following days, since this is the 15-minute chart, we do start trading higher up, and then this swing high takes out the buy side liquidity here, right? And if you use our call out tool and put it right on the high here, you can see that we run it out by 3 points and then a little bit trade higher. You can see that we outrun the standard deviation by 3 ticks here, and then we start to reverse. So obviously it's not going to be 100% accurate all the time, but it still gives a decent expectancy as to how far we can extend over or under buy side or sell side liquidity points. And finally, here's the 3-minute chart on oil futures again, where you have a smart money reversal here at the bottom, market structure shift taking place above this swing high, and original liquidity target in the form of buy side resting above this swing high here at 4:15 in the morning. So you're going to measure your first retracement past the market structure shift, which is this swing high to low, and then find our standard deviation above the buy side liquidity. So this -1.5 lines up almost exactly with this buy side liquidity, so I would use the next one here at 71.76. So we continue a little bit, that push higher, and then eventually we push through the buy side, taking it out and stopping at that 71.76 level perfectly before trading back lower and taking out the sell side again right here. So those were just some quick examples of the rules that I like to follow when finding these swing projections for highs and lows. Obviously there will be times where this fails and it over or undershoots the fib level. I suggest that you do your own back testing to see which model this works best for and at what times of day, since time and price are both equally important. If you have any further questions about the topic, please leave them in the comments. I'll do my best to respond quickly. Otherwise, just join the Discord. The link will be in the description below. Appreciate all you guys who watched to the end of the video, and until next time, good luck and good trading.